Welcome to this tutorial on bond funds explained for beginners. A bond fund is a type of investment that pools money from many investors to invest in a diversified portfolio of bonds. Bond funds can be a low-risk investment option and provide regular income. First, let's start with the basics. A bond is essentially a loan made by an investor to a borrower, typically a corporation or government entity. In exchange for the loan, the borrower agrees to make regular interest payments and return the principal amount at the end of the loan period. Bond funds are often categorized into different types based on the type of bonds they invest in. For example, government bond funds invest in bonds issued by governments, while corporate bond funds invest in bonds issued by companies. There are also high-yield bond funds that invest in lower-quality bonds with higher yields. When investing in bond funds, it's essential to understand the concept of yield. Yield is the return an investor can expect from a bond fund, and it's typically expressed as a percentage. The yield is calculated based on the interest payments received from the bonds in the portfolio, minus the fund's expenses. One of the benefits of investing in bond funds is diversification. By pooling money from many investors, bond funds can invest in a large and diversified portfolio of bonds, which can help to reduce risk. Additionally, bond funds are often professionally managed, which means that investors don't need to have extensive knowledge of the bond market to make informed investment decisions. Exchange-traded funds, or ETFs, are a popular way to invest in bond funds. ETFs are traded on stock exchanges, like individual stocks, and they offer investors the ability to buy and sell bond funds quickly and easily. When selecting a bond fund, it's crucial to consider the fund's objectives, risks, and fees. Look for funds with low fees and a track record of stable returns. It's also essential to assess your own risk tolerance and investment goals before investing in a bond fund. In conclusion, bond funds can be a valuable addition to a diversified investment portfolio. By understanding the basics of bond funds, including the different types of bond funds, the concept of yield, and the benefits of diversification, investors can make informed decisions and achieve their investment goals.